everyone, and warm welcome to the Boutique Hotel's Crisis Guide to Rules, Regulations, and Investment, produced by BLLA. I am Frances Karagian, the founder and CEO of BLLA, which is the Boutique Lifestyle Leaders Association. If you have questions, you can put them in the chat box to the right side of your screen, or you can email them directly to info@blla.org, and we will send them to the panelists and get back to you with answers. A little bit about BLLA. We are the official association for the world's boutique lifestyle leaders. We're the original hub supporting boutique and independent hotels since 2009. Our values are leadership, advocacy, and education. And just a little about our mission statement I thought I would share. As the official voice of the industry, BLLA is dedicated to not only championing boutique lifestyle culture as it grows, but actively advancing it, evolving with consumer trends, and extending our global network to include innovative hoteliers, entrepreneurs, vendors, and visionaries in boutique food, fashion, fitness, beauty, and beyond. And just a few notes, subscribe to this channel and you'll be notified when this goes live. And also you can see the other seminars that we've had. Read our newsletter, add news at boutiqueweekly.com to your primary inbox to make sure you get up to date on all the boutique news, which we're putting out constantly as news happens, because as you know, it changes daily. And also please use the hashtag, we really appreciate that. Boutique Strong and Save Boutique Hotels. We really need your support more than ever now. The boutique sector is, has, and always will be a family. Together we have reinvented what a hotel is, and even through a crisis, we will continue being pioneers. And now I would like to turn you over to Daniel MacDonnell, who will moderate this session. Daniel is Senior Managing Director of Cushman Wakefield. Over to you, Daniel.
Thank you, Fran. We're very lucky today to have experts representing ownership, valuation, and legal on the panel. So I'd just like to introduce everybody quickly, and then we'll get into a little bit more about what they're focused on. Alphabetically by company, we've got John Blanchard, who's founder, BLVD Hospitality. Omar, Palacios, partner, COO, CFO, Geolo Capital. Samantha, Ahuja, shareholder, Greenberg Traurig. And then Suzanne Mellen, Senior Managing Director, Practice Leader, HVS. As Fran said, I'm with Cushman Wakefield Global Hospitality Group. I guess for our panelists first, if you could, please focus on, or just, I guess, provide a short overview on your company, what you and your group are focused on in today's environment. And maybe, John, we could start with you.
Thanks so much for joining us today. Boulevard Hospitality is located in Los Angeles, and we've been responsible for developing a number of boutique hotels, such as Ace Hotel, Hoxton, Soho House, a number of others. Yeah, we're excited to be here today.
Terrific. Omar?
Thanks, Daniel. I'm the COO and CFO of Geolo, as you earlier noted. Geolo is the private equity arm of John Pritzker's family office. Geolo historically is a developer. One of our focus areas is development, acquisition, and management of hospitality and multifamily properties. Historically, we were equity investors, but now we've evolved and developed a debt business. We're actually lending to third parties. And historically, we were active in hotel management, where through a series of acquisitions, we built Two Roads Hospitality, which was the largest independent collection of lifestyle hotels, which we sold in 2018. Stuff that we're working on. Look, I think our biggest focus area in the wake of this crisis has been shoring up liquidity, kind of making sure that our assets are safeguarded and, that we've taken care of our employees in what's been just a really, really tough environment. And now we're starting to think about how we reopen and how we restart this business in what's a pretty uncertain environment for the business. I would also add that, while we're still actively looking for deals, we are effectively taking a little bit of a pause at the moment and just waiting and seeing what's going to transpire in the environment as we see business start to ramp back up. But we're really still long-term focused on investing in this business and just trying to find and pick our spots thoughtfully.
Terrific. Samantha?
Sure. It's Samantha Ahuja with Greenberg Traurig. We are a large international law firm with 30 plus offices worldwide, 2,000 plus lawyers. I am based out of the Washington, D.C. office. We are essentially focused on, traditional real estate with a focus on hospitality, casinos, resorts, typically representing owners and developers with their acquisition, maintenance, operation of hotels, resorts, and casinos. What we're doing today, or what I'm busy doing today, is probably a combination of management, amidst all the pandemic, hotel closures, managing lenders, managing hotel operators, and dealing with liquidity and, loan modifications, et cetera. And the other part is, working on future development. So we do see some of that, still moving forward.
Terrific. Suzanne?
Hi, I'm Senior Managing Director, Practice Leader at HVS. We're a global full-service hospitality consulting firm addressing hotel, gaming, and other hospitality assets. And we provide advisory services from the inception of a hotel, from a piece of dirt, all the way through construction. We provide asset management once hotel's built, appraisal services for refinancing and financing transactions. We have a brokerage division for the ultimate disposition of an asset. And right now we are, I would say, in the consulting evaluation group where I reside, we've had a pretty good shift in our business. It was a little bit of a pause there, but it's starting to pick back up. And we're now seeing lenders want more advisory services, and valuation related to existing loans, and evaluating them as opposed to generating new financing for assets at this time. We're still getting feasibility work, and now property tax work and litigation have started to ramp up too, which is just reflective of the shift in the current market that we're in.
Oh, excellent. So, and as Fran mentioned, I'm a Senior Managing Director in the Global Hospitality Group. We have 2 offices in the U.S., another 13 internationally. I lead our practice in the Western region, debt equity, financings, investment sales, and I'm also a principal in our Securities group. We focus on programmatic joint ventures and commingled funds. I guess, we've seen STR data, as it's kind of a macro question, sort of bottom out the last 2 weeks and sort of look like it's making an uptick. We also have Passover and Easter, so that might have affected the data, but it seems that we might have reached the bottom. And now you're talking about states opening up, and some properties are opening up, and how they're opening up, I think, is interesting, because how do you deal with a new situation? And some of the practices are probably sustainable. Simplifying the room, making it easier to clean, making the check-in, automatic. You can do it through your phone. You don't have to, a lot less contact with people, limiting people in elevators, et cetera. Some things from a long-term perspective are not. 3-day turns between rooms to clean them, shutting down your entire F&B, both your restaurant and your bar. Obviously stopping room service, which maybe some hotels would like. But in the context, particularly of the boutique environment, which are heavy sort of F&B focused and very activated lobbies, what do you see the game plan going forward with hotels on maybe a longer term basis, how they can operate in this environment as we reopen up, and they can be profitable? Because if you're turning rooms every 3 days, you're not going to be hitting your occupancy, which is probably going to be your 45 to 55% occupancy to get it a break even. So, how do you see these things changing over time, and what is it going to take? I guess maybe we'll talk to the owners first, and then we can circle back to valuation and legal. But maybe Omar, if you want to start on that question, and then we'll circle it around.
I get the tough one, I guess. Look, I think it's a function of how you thoughtfully can ramp back up, and I think I alluded to earlier, there's a bit of uncertainty as to what the demand environment might be. So I think part of the way this plays out, it really depends on what the current situation is in each respective market that you're in. So for example, the thesis that resorts will likely be the first to come back, especially drive to, makes a lot of sense. A lot of people are sitting at home, have cabin fever, they're looking to find a safe environment. So I think if you can portray to the customer that you have set up all these standards, which the standards haven't yet really been defined, right? I mean, I think we've all seen wash your hands and wipe down things with the appropriate products and whatnot. But I think if you can set the stage for customers to know that you're not kind of bunched up in a place that's not safe, that will be one way to start the environment up. Small boutique properties, lifestyle properties, we're kind of built to bring people together. And so this whole concept of physical distancing runs counterintuitive to the way we build our projects. So it's going to be, in my view, somewhat of a slower ramp back as people get more accustomed to this new environment in the new world. And if you happen to be in a low-rise kind of facility that has a campus-like structure, like a resort, I think you're going to be more likely to get people to come back sooner rather than later. I can't tell you I have the answer as to how you kind of shuttle people up and down from the lobby up to a rooftop. I don't know. I mean, you keep hearing that maybe it makes sense to have one person in the elevator at a time. I don't know how that works, right? So I think the demand situation is kind of one thing that you're going to have to watch. I unfortunately don't see it as you open the doors and kind of, start like you would normally restart any project or launch a project. I think it's going to be a little bit of a slower ramp up with smaller staffing levels, and kind of gauging what the demand environment is going to look like. And quite honestly, not everybody might open up all at the same time. It might be staggered, and it really depends on kind of what your liquidity position is and whether or not you're in a position to sustain cash flow losses in the near term as you ramp back up.
I'd also add to that I think what we're looking at is opening up just certain floors in the hotel as well. So then you have less staff that needs to clean or operate, et cetera. And then, having spoken with a lot of the boutique and lifestyle brands and even ones that we're involved in, I think a lot of folks are looking at the food and beverage differently now. Francis knows this, I've been talking about this for a few years now on different panels that, I think that we've had to rethink the F&B for a while now. And I think this is kind of forcing us to do that, where, our revenue streams are no longer 50% of F&B. They need to get more in line. So we see grab and go markets coming back into these boutique and lifestyles, and possibly not having so many outlets anymore. But how things are going to function in elevators and pools, swimming pools and things like that, I think are going to be up to the brands, and I think that they should be. I think it'll be interesting to see how different folks do it. We have a project that we're doing in Anaheim right now, and we're eagerly anticipating the reopening of Disneyland, as you can imagine. And there's really no crystal ball to that. And I think, what helps our guidelines with that is the reopening of Shanghai, and how long that takes and how they do it will give us kind of some good ideas. And I think we can look at other countries that were perhaps before us and what they're doing, and we can kind of learn and watch what they're doing. But, you know, you take Disney as an example, who cares so much about their brand and their safety of their guests, sometimes more than others. I mean, their brand is probably one of the most protected out there. So it'll be interesting to see how they do it at their hotels and their theme parks. But yeah, it's going to be, like I said, I think it's going to be pretty up to the brands, right? I think it should be.
I guess, John, you've got also an interesting perspective, and you have investments in restaurants and then also in membership clubs. How do you see those operating in a sort of a post-COVID world? You know, if there is a post-COVID world, it might be a post-vaccine world, but what's the game plan there?
Yeah, you know, it's hard, and I think it's city by city right now as well. You know, we're still waiting for the specific guidelines here in Los Angeles of exactly how we're going to treat our restaurants, Soho House, hotels, etc. And, you know, it's rumored that it's, you know, going to be 50% occupancy essentially in these restaurants. You got to take out 50% of your seating, or at least section it off. But, you know, when we talk about, you know, vaccine or this or that, there's so much unknown, and, you know, we might be the minority in this, but, you know, we think so much of it is just driven by some fear. And, you know, what happens when statistics start to come out over the next 60 to 90 days, where we get to hear about folks that, you know, didn't have it so bad? Because what we hear about every day are the deaths and this and that. But, you know, as we start to get more of the data, perhaps it's not just about the vaccine, perhaps. So I think we all have a little bit more to kind of watch and learn, and maybe, and me, I'm just being optimistic here, maybe it's not as bad as where we sit today. Maybe there's a little more freedom, hence why I say it's going to be up to the brands. But again, I might be the minority in that.
Well, Samantha, I'd like to ask Suzanne, but, you know, when you go to a ski mountain, you've got, you know, notice of risk, assumption of risk, and then a release of liability. And, you know, is that what hotels need to be headed towards when you sign in? I mean, they can guarantee they'll do X, Y, and Z, but people are asymptomatic. You know, you're taking a risk, everything in life. So if you enter their hotel, they're not liable for your 100% of your well-being. You're taking a risk by entering that establishment, as you do when you go skiing or many other activities. Is that a possibility for the hotel industry? Just when you check in, that's a form you sign, and do you think that has some legal validity going forward? That's a, you know, and then we could talk to the owners as to whether their customers would actually be comfortable signing that, but that might be the only way to go forward.
Yeah, I echo John and Omar's kind of initial position that this is really going to be state by state, location by location based. I mean, we have had multiple inquiries as to waivers, right, for those properties that remain open or on a limited operation basis. And some of that is influenced by innkeeper laws that may be on the books, or other types of non-waiver options that may be available at the states, et cetera. So that's really, from a legal perspective, that's really going to vary state by state, location by location. But, you know, I think I echo the sentiment that this is going to need to be almost done in like 30 to 60 day periods, right? What we accept, or what the balance between accepting risk of the owner, the employees, and the guests. So what we may accept today, like, you know, maybe waivers are okay for the first 30 days, but as we get more data and things start to shift, you know, those won't be needed, or guests will start pushing back on that. I mean, we're getting a lot of questions on, can we take temperature readings of the employees, of the guests? You know, what if the guest refuses, right? Can we keep that, you know, can we tell them they can't stay at the hotel? You know, can we limit the hotel to only our guests? So, you know, I think the real answer is, unfortunately, there is no right answer. I think it's going to really matter, you know, based on what the owner is willing to accept as risk, you know, whether the city or the state has put out some guidelines that the owners can turn to. You know, Las Vegas, it doesn't appear there will be a lot of guidelines, but in New Jersey and New York, they're putting out a lot of guidelines. So, you know, we're going to be looking to things like that and advising owners, you know, really on all of those elements together versus just one. And really, it's not much different than it is pre-COVID, right? I mean, some places like New York had a different acceptable risk when they had to deal with bed bugs and Legionnaires and all that versus, it's called Portland, Oregon, right? So there were inherently already different risks. This one feels it is more global. It feels more real kind of because of the statistics, but inherently it's the same analysis that we're going to have to undertake in many instances.
Okay, terrific, and I agree with that. Suzanne, it's obviously hard to value hotels in today's environment. I mean, a lot of folks have been put on RevPAR, but you're talking about a lot of boutique owners with a heavy F&B component in their top line. That's a big component of how they get back to business and make money because, unlike room service, they're selling a lot of B on the F&B, and so there's much higher margins. And so when you're looking at, obviously you have to look at an asset by asset basis, but how are you weighing through the next few years and trying to get a sense of how to value assets in this current environment and then with a lot of potential restrictions?
Sure. Well, just in concurrence with what everyone said so far, there's a lot of uncertainty, and we're going to have to take it, month by month to figure out where this is going, and it's going to be state by state, asset by asset. But generally, valuation is, really the income of an asset. People buy hotels for their income and how they can get the deal financed, and that's what people are going to be looking at. I think we also know that there's a lot of capital lined up, because people are anticipating that there are going to be a lot of opportunities to buy assets at price levels that are favorable and that things are going to recover. And so there will be a time when assets get back to very robust performance. So we kind of have this balance between the reality of today and the upside of tomorrow that people are looking to. So it's going to all be about trying to generate some net income. And I think the good news is what I'm seeing is that the break-even point for hotels has lowered to some degree because expenses have been cut so to the bone, lower than we've ever seen before. And hotels, as they start to reopen, are going to have to be completely analyzing every little move that they make in terms of a cost-benefit analysis and what people they add back, what services they add back. And that the expenses will be really contained so that when revenue does start to flow in, they'll hopefully be, more flowing to the bottom line. Obviously, the lack of beverage revenue in a very robust food and beverage outlet is going to be a significant loss. And, there's just going to have to be, I don't know whether there's like small pre-tested groups of people who can have a little 5-person party in their room, and you can come up with creative cocktails so that you can serve them and come out with marketing initiatives where you can, make, again, little isolated groups or some creativity to try and maintain that income stream. But of course, you're going to have to offset that with the cost of doing it. And so some of this you may have to kind of ride it out, very thoughtfully as we start to rebuild the business. I know, and I think in the boutique sector with the heavy F&B and the heavy B, so to speak, really appeals to often a younger demographic. I think that demographic is going to be it's going to be more inclined to come back sooner. There are people who are older, people like me, who are going to be concerned about, do I want to take the risk of going out there? But, there's a lot of, people, pent-up demand. And I think once we start seeing, as John had noticed, that some of the good news will come out that we haven't been hearing, and that there are ways to be out in the public without having to worry about so much about getting this, then I think things will start to ramp up. But it's going to be a slow build.
Yeah, I think that term revenge travel,
yes,
it would make sense. I think it works as long as people have enough money to actually revenge travel. So that's the other component. But to your point, I think there's a certain component of society, clearly, as you can see from Spring Breakers, that's going to be back and be much more willing to congregate. And obviously, they're less susceptible. So, maybe there's a rationale there. But the state and the state governments, local governments, going to have a big say on that, and that's the one area where they hope they don't overreach and then limit the ability for people to make decisions about how they want to live their lives and interact, and that'll be, I think, a big gating event going forward, something to watch, because if you're making businesses uneconomic, it doesn't matter whether you allow them to open up again. I guess with that, as a good segue, Suzanne, when you look at best practices that are being employed by independent boutique, either the brand management companies or even the owners relative to what they're going to do going forward, what can you provide that you think is helpful for people to think about when they reopen to make that a success?
Well, I think one of the first things that we're seeing is the need to monitor the demand. I mean, everybody's talking about reopening, and I'm like, well, if we open people, and I see people are saying May and maybe June 1st, and I'm thinking, well, who's going to be coming? It's one thing to reopen. Here you've closed. It's been an economic decision to close because you're going to lose less close than if you're open. But if you open and nobody's coming in, you'll be right back where you are. So one of the key things is to monitor very, very closely what's going on in the market. There are a lot of different tools to assess bookings, how bookings are flowing. You have to reinvent your market, relook at your market mix, because it's going to be a completely different story, and may have to pursue market segments that you haven't pursued before. Stay on top of what your competitors are doing, and really take it, do it very thoughtfully, because you can't just open your doors. It's not like it used to be where you could just open your doors and then people would flow in. So I have a feeling that some of the openings that are planned are maybe a little premature, relative to where we are in the testing and the state regulations and restrictions. So I think it's just this day by day looking revenue management, where's your business coming from, and then also your cost containment. It's just going to have to literally be a constant assessment throughout the remainder of the year, I think. That's what I would.
Yeah, and if I could add something to that as well, some of the things that we're studying, and Omar, I'd love to get your thoughts on this, is that, we're seeing, travel, leisure come back first, and also with a lot of kind of like local. So here in LA, Palm Springs, San Diego, Santa Barbara, so you don't necessarily have to get on an airplane for it, right? So I think we're going to see that come back first. I think businesses are going to be slow to put their folks on planes for meetings when we can just do this for meetings, right? And then one of the biggest drivers for some of our hotels are obviously the group business and the event business, which is a complete wash for this year. And when large gatherings are acceptable nationally again is TBD. And we all know that these events are 6 to 12 months out in planning. So are we starting to plan, again, when positivity comes in or new data facts or vaccine, so are we now planning events that would occur in Q3, Q4 of next year? So there's some unknowns. And I think as we get closer to the fall and more of this evolves, we'll be able to start pinpointing and planning. But right now it's, kind of anyone's guess or my guess, or I'd love to hear your thoughts, Omar, is kind of end of next year is when we start getting large, consistent group business again.
And the group business, I'm not going to repeat. I think everybody can see their own books and can see the trends. I think that the challenges you're going to have with companies is there's no way that you can feel like you can put your employees in harm's way. So the group business, the bounce back on group is just really going to be tough to tell. I think that the first layer that comes back in terms of business-oriented travel are businesses that have some essential, that has the kind of this essential standard. And it's going to be a sector by sector kind of evaluation. So if you happen to be, I don't know, let's say in the construction business, and you're building a project, and you have team members that have a project in another part of the country, at some point you're going to have to send someone on a plane when you feel safe to do so. And you're going to see this kind of this business transient business start to happen. It'll be a kind of a slow kind of ramp up, but kind of big, anything that involves a gathering, that to me is still really tough to tell. I think I can see one day where you're going to have a gathering, and rather than have 25 people lined up in 25 per row in a room, maybe you have 5 per row, and you have smaller groups. But I don't see that business happening this year. And I think that, as we know, that business has a lead time associated with it. So you have to start thinking about this side of the business as more likely 22 business, quite honestly, rather than 21 business, because you don't know how, our industry conferences, for example, we've kind of pushed them back to November. Well, I don't know if we're going to be going to NYU in November. Maybe that gets kicked out another year.
Or Alice in January.
Exactly. But I really do think, though, that we are built to be coming together. I mean, that's kind of how the human spirit is. So there are going to be people, and Suzanne, I think you mentioned it earlier, there are going to be people that are going to want to gather, and maybe it's the younger folks that want to get together and they feel like they're safer and whatnot. And I think that, Samantha, turning over to you, that is where I think the conundrum is for all of us, because as someone that provides a facility that is intended to be a safe place for not only your employees, but also for your customers, how do you not expose yourself, right? So to me, as an owner, I'm still concerned that there's not a clear delineation as to whether or not I am putting myself and my business, and I'm exposing myself to further liability in what is this very uncertain environment. That's I think one of the big struggles that we all are struggling with, because I'm like you, John. I can be super optimistic, and I believe that people are going to want to come, and they're crazy because they want to get out of their houses. But I think on the flip side of it is you open up.
I'm ready to book my hotel in Santa Barbara and Palm Springs.
I mean, we've got a bunch of people that want to go to Big Sur and Carmel Valley, and they're dying to get to our properties. But how do we protect ourselves? And I guess I turn that over back to Samantha, because it's something that we are definitely thinking about as an owner.
Yeah, and I think that the bucket of liability that kind of exists with where we are today. So as we tell our owners, let's think about all the things that we can do to protect ourselves, or all the policies that we can implement, training that we can do, et cetera, to protect our employees, our guests. Some of that is going to be based on, what people are willing to accept, right? Are employees going to be willing to come back? I mean, I think in some instances, you're going to want to open your hotel. You're going to call some of your employees and say, hey, come on back. And they're going to think about whether they want to come back, right? And some of that comfort is going to be given either through, here are the policies that we've implemented to protect you, et cetera. I think we look to insurance. The first thing we think about is, how do I insure my risk so that I've mitigated any damages on my side? And the reality is, I don't know that we're going to have an answer for that today. And I don't know that if we're going to have an answer for that for a few years, right? What is insurable and what's not insurable is questionable. And that's why I kind of say you have to look to some of the fundamentals that have existed pre-COVID, right? What kind of policies did you have in place? How are they being enforced? How are you training your employees? What are the things that you are doing to ensure that, the employees themselves feel comfortable, right, to provide the services that you want to provide to the customers, and the customers themselves feel like you're taking certain efforts in order to protect them. And I realize, we look to say, okay, how can I reduce that risk? Like, right, how can I reduce the possible damages? Because eventually somebody's going to show up positive, right, in your hotel. It's just a matter of when, probably not if. And the question is, how do you handle it? And I guess I would say, as a lawyer, policies are really important. Training is really important. Being upfront and transparent is really important. And I do know from some of the work that we are doing, speaking with your insurance company and finding out, what's the minimum, what are the things that they're looking for, what are the cleaning vendors, and policies that they're at least initially looking for best practices. There's been a couple groups that have banded together in Europe, et cetera, to talk about how do they best implement, best practices for, hospitality groups, right? We should be looking to some of those things and banding together in order to determine, to be able to say, hey, look, we're implementing best practices, right? Therefore, this is how we're going to make you comfortable that as to employees and as to guests. I don't really think there's a simple answer, unfortunately, for an owner as to, how do I eliminate, risk with a business that includes transient, inherently is transient, right? So I don't think that's there. I will say that I have found that the question is, how do I manage my risk? But how do I manage my liquidity through this period of time, right? And so it's almost like, there's this constant pull, of how do I do both of these? Do I want to do temperature readings and potentially scare away a room? And do I only want to open a floor, or do I only want to open up, a limited part of my hotel? How is that going to, affect, my loan, right? How is that going to affect, the fixed fees that I have to pay? So I wish I had a simple answer, but nothing appears to be simple in this pandemic. So, but I do think it's important for us to go back to some of our fundamentals, because I think that's what the hospitality industry has been really good at, is establishing some baseline. And I think if we look to that for guidance, and implement it, it will be beneficial for the industry.
Terrific.
I would also think that, just real quick, Daniel, I also think that some of this is going to be around age of folks that are coming to these hotels, right? Because as more and more data continues to come out, and hopefully we're going to get a big data dump here in the next 30 to 60 days, but kind of your 20 to 40, 50-year-old, we're going to see more of those folks coming in than the 55 plus. And a lot of folks that I've spoken to from all over the country that have had it, it's a really bad cold for those ages. So again, I think we're going to revisit this panel again in a few months, and I think we're going to probably have possibly, hopefully, a different. But I agree with there's some tweaks that need to be made. But I don't know. I'm just not on the bandwagon yet that it needs to be this drastic. But I feel like I'm the minority in most of these calls.
Every I think panel you sort of have that's diverse like this, a lot of experts. The questions come up. If you look at a hotel sales transaction volume, is down about 50%. Q1 2020 versus Q1 2019. A lot of that obviously was sort of in February, where deals close or they're under significant hard deposits. But in the post-COVID world, are you seeing transactions occurring? And then, to the extent you can talk about generic discounts, how do you think people are looking at value? We've heard ranges of 25 to 40% off a 2019 value. Obviously, it's deal by deal, but anybody can talk about what they're seeing in the market from a transaction perspective, and you can either talk about investment sales or I think loan sales. We're going to address that more specifically at another time. But either one, if you have a view on that, please weigh in.
Do you want me to start?
Yeah, please.
Okay. Yeah. So, we're seeing GroundUp opportunities are kind of frozen right now for the most part. There are very few lenders out right now that we know that are active, but more so in, kind of repositioning or distressed assets. So I think there's some opportunities there, obviously. As far as, how we put a cap rate to things, I don't see how we do right now, or it's just specific on that asset. I don't think we're really able to do that right now. And we think that there's going to be more distress coming, because I think right now there's some stimulus, there's some, the PPP, there's assistance for certain things, but that's going to fall off. And as we all continue to discuss, when group business and regular travel continues 2021, 2022, we don't know. But we think that as we get closer to the end of this year, it's going to get worse. And there's going to be, a lot of hotels that aren't going to reopen, aren't going to be able to stay open. And I think you're going to see that. But, hopefully when, there was a turn of events when the reopening plan was announced, and as we go through city by city and state by state, I think we're going to start to be able to address this and address cap rates and have kind of a new look at it. And I think lenders and folks are going to want to start having conversations again once we're open again and once things are moving again, and we'll be able to reassess it then. But right now, it's best way to say it is kind of on pause, with the exception of kind of existing assets.
We've been seeing the same thing, a complete pause. Anything that we've been working on that was related to a sales transaction basically has ceased. The deal just kind of has gone by the wayside for now. But there is the ongoing need to value assets. I mean, we are doing it every day. It's challenging. I have to say that most of our clients don't want to know what a hotel is worth right now or what we might think it's worth, because it's not the greatest news. It's just like your stock portfolio. Most people don't want to look at the statements right now because there's a full expectation that we will come out of this and the value of our portfolio will come back. And it's the same with hotels. Right now, if somebody were to there's apparently lots of capital and buyers lined up to jump in once the market loosens up a bit and we get a little bit more clarity. And the reason they're lining up is because they think there are going to be some good deals and they're going to be paying less for an asset than they would have paid in 2019, and they'll be able to ride up the wave of recovery. So if you were to value a hotel right now, of course, it's not the ideal time, because over the near term, and near term cash flow is worth more than cash flow down the road, it's not looking pretty, it's negative. But as we move through this, we'll move beyond the worst of it, from a year from now, and things will start to really improve from there. So, we did look at the last downturn, and Real Capital Analytics reports that the average hotel, based on their statistics and based on sales transactions, declined by 27% in value during the Great Recession. And of course, that ranges from hotels that didn't lose as much and hotels that lost more of their value. We do expect there to be an impact. And then it's going to be market by market and asset by asset, and how quickly can it recover. And I think the biggest concern is probably the average rate. Where's average rate going to fall out? I think we all think that demand will slowly recover, but the real concern is, are we going to have like a reset in pricing? Because first off, we're changing market mix, and the demand that's coming in is lower rated right now, and it's going to be near term. But we're hoping that, the piece of advice is to try and maintain as much rate integrity as you can. And as you come out and you start to restore some of your normal sources of business, that rate can come back. And of course, it's going to be very, driven, supply and demand driven. But I think that's, a very big concern about where values will ultimately end up. But it's not good right in the short term, but there's a lot of optimism where this will end up coming out of this pandemic.
Yeah, I would add that we're underwriting very specific situations. There are certain deals that were basically broken deals that are looking to find a home. But I think, just to kind of take a step back and remind everyone, your typical process to sell a hotel was you marketed it, you had kind of a window of time where you received bids. I mean, it was typically a 45 to 90-day process, right? Think about where we were 45 days ago as opposed to where we are today. So anyone that was planning to sell an asset probably is not selling. They're waiting because there's no certainty. So on the one hand, you have this universe of buyers that are expecting the deal. On the other side, you have all of your typical inventory that would have come on the market that now people are saying, there's no way I'm going to sell it because I don't believe I should sell for 25, 30, 40%, whatever you want to call it, discount. So I think what's going to happen with the market is just everything's going to get backed up, and then we're going to need to see revenue data, and as Suzanne has rightly pointed, what does the ADR environment look like? What does the F&B environment look like for a lifestyle property? All of that data, we're just, we're spitballing here. We really don't know how that's going to transpire. So I'll take one step back. I think that if you take the big picture perspective, anytime that you can acquire properties below replacement cost in what I can still consider to be, no matter what you hear in the popular media today, the best country in the world. If you can buy properties below replacement cost and kind of restore our normal growth curve, not on the GDP standpoint, but from people. I mean, we add a few million people a year through immigration and whatnot, the country's going to grow. All right. So if you play the long game on this and you can find deals that are attractively priced, you could do well in this business from the general point. I would say one of the things that in our industry that we have also struggled is going into this downturn is that construction costs had risen considerably. Land costs had risen considerably. And Suzanne was probably trying to make the numbers work on her side to come up with these valuations. I was struggling to come up with the same math before this downturn happened. I couldn't make any deal work. So there is going to be a revaluation that's going to take place. I'm not going to say what the percentage is or where I think it's going to end up, but it does need to come down to some element, and then you're going to see this rush of capital kind of swoop in. I do believe that.
Great. And we, on the BOV side, we've been telling our clients the exact same thing. It's either like a more of a manageable discount to 2019, and some assets are more heavily impacted. At the end of the day, I think the government intervention is what I'm most concerned about, is how long, what's the term on that and how draconian is it? Because if you make certain elements uneconomic, you really have to work around that. You can do ghost kitchens and other strategies, but at the end of the day, if you can't get people together and activate a lobby, it's going to be hard to run a business of any upper upscale or luxury environment, and have a boutique environment with a positive, active customer experience. I guess just with that, I can tell you, because we've got 15 offices on the commercial side around the country, there's definitely liquidity on the financing side for other asset classes, obviously primarily multifamily, industrial, credit tenant office, et cetera. There is, and with that, a lot of the components of the capital markets are still active. I mean, obviously CMBS market right now, because there's really no bid for non-AAA paper. That market's pretty much shut down. Hopefully, maybe temporarily. I mean, we expect it to come back, probably not the same velocity, certainly for this year as it did last year. Mortgage REITs are obviously to a degree impacted, but private equity firms, finance companies, banks, either super regionals, money centers, local, have capital. What are you seeing, if anybody, relative to doing transactions with lenders post-COVID? In the hospitality sector, what are you seeing specifically relative to activity from the lending community? And then I guess with that, with properties that you own, this is going to the owners, what flexibility have you seen with lenders on deferrals or restructurings for the existing assets?
Let me just start. I think that the general approach is we're going to just kick the can 90 days, right? The idea of getting forbearance on pushing back interest payments, and fortunately, some of the banks have come off this notion that you can just capitalize the interest on principal. That's kind of been put to the curb for the moment. I would say that if you can find yourself in a situation where you can extend and get more term in some form or some fashion, there are situations where you can do that, but that also would require you to come out of pocket to some degree in the form of making interest payments. I've seen more flexibility in regards to freeing up reserve money that was trapped and having that money used to offset negative cash flow in the near term. The banks, for the most part, have been receptive to having thoughtful and constructive conversations. They don't want to own these assets. They don't want to have to, figure out how to kind of take them on and then parse them out. So I think that given that the environment that we have is a situation that was not caused by the owner, but rather one of what the world situation is, we've seen some level of negotiation that is constructive. That doesn't mean that the problem has gone away. So I think for the most part, near term, it seems to be a constructive environment for owners.
I would just echo that. We've been seeing just loans being extended, the deferment 3 to 6 months. And so things that are coming up, either the loan is due or they can't make their debt service, everything is just, kick the can down the road. I mean, that's what we are seeing. We are seeing some loan modifications, and interest rates seem to be kicking up a little bit for those. Obviously, there's greater risk for the lenders right now, and lower loan to value ratios, but it's rare. There's not that much, very little new financing that's going on.
Samantha,
Yeah,
you see anything different? Yeah.
Sorry, I was just going to say that, I think we've been seeing things all across the board, right? So we've got, our typical balance sheet lenders who are being a little bit more receptive as to what to do. We see owners looking for ways, again, to avoid capital calls. So they're asking to tap into their reserves that may exist. But we really find that lenders are really looking at the operation of the hotel pre-COVID. So if there was issues walking into a hotel pre-COVID, they're going to approach a quote unquote loan mod differently than they are if it was a perfectly performing, revenue generating, profit generating asset pre-COVID. So we do see that analysis. We also have seen some instances where lenders are really reluctant, to really even forbear, payments, et cetera, for 30, 60, 90 days. Or a longer period of time, and they only want to do it in 30-day increments, right? They kind of want to see what happens in the next 30 days, and they want more commitment from the owner to put forward a plan, right? They want to see these plans through the end of the year, which is mystifying in some regard because nobody knows what's going to happen through the end of the year. But they want to understand how you're going to use your reserves, where the additional capital is going to come from, et cetera. So, the conversations often are very lengthy, very detailed, et cetera. We just saw, massive movement into the special servicer market, right? All those CMBS debt that defaulted and just recently. So we have yet to see what's going to move and what's going to happen there, if anything. And I think to the last question, the next 30 to 60 days are going to be very instructive as to the market, right? Who is going to be forced to put themselves on the market, or forced to find new equity, or forced to figure out a new position for capital, whatever that may look like. So, in that respect, I think there's two different type of lenders, and then we've got your regular equity players who kind of see this as an opportunity to take advantage of their position in the capital stack, and perhaps look to increase their position. So again, location specific, asset per specific, but I have found that a lot of the conversation revolves around performance pre-COVID as a starting point.
I would add that there's a good borrower bucket and a bad borrower bucket, and if you were already on the way to miss covenants, or you were close to tripping covenants, or you had too much leverage, negative cash flow and whatnot, you're probably going to get treated differently than you are if you were keeping your interest current and had strong sponsorship behind you, quite frankly, and we're in a position to defend your asset even in the toughest environments. I'll give you a very, very specific example. In our portfolio, we have Ventana, which is in Big Sur, and prior to this event having taken place, we had to shut down the business when the bridge had to be rebuilt that connected the northern part of California to the southern part of California along the PCH. We put in all the money, kind of kept the business, kind kind of kept our employees that we needed to. We had to shut down temporarily, but when we reopened, our lender kind of saw that our track record is that we stand behind our properties. So from the standpoint of how you're perceived to be to the lender, if you demonstrate that you are there when times are tough, you're going to get a better deal.
We're getting close to the end, but the fairly timely. Looks like the $300 billion addition to the PPP is going to get approved likely today, and then you've got this Main Street lending facility that's available as well. Do you see that being sufficient? Do they need to rework the program where they prioritize small businesses over even larger ones? I think that some of these restaurants may be getting a bad rap because they're still keeping their employees. It just aggregates to one central corporate structure. That being said, they might have the wherewithal to survive, whereas small mom and pops can't. So how do you think they should, first off, I guess, do you think this is efficient, this next round? And then secondly, should they manage the process differently than they had with the first round of PPP? I'll just open up for any.
Yeah, I think that it's actually interesting. I don't know whether another 300+ billion is enough or not. I think the bigger issue really is the June 30th date, and reinstating all of your employees. Hotels are I don't want to say mostly, but there's more hotels are shut down than open and operating, and query whether all these hotels are going to open up in the next 30 to 60 days, right? So are they really getting the benefit of being able to sustain their asset, the collateral, for a period of time through however long this is. So, I think I have spent the last month really majority of my time advising on, this loan program. And I think that there were some good things for hospitality in there and for hotel owners specifically. But I think some of it, really doesn't fulfill the need that's there in order to maintain the asset. I mean, at the end of the day, the hotel needs to be there, right, whenever we do reopen. And so I think that there's some challenges in there, period. With respect to, I do agree that I don't think that the program rolled out in a way that really benefited the smaller business owners versus those with very large established relationships. Hopefully we'll see some of that corrected in this round. They had allocated a larger amount to smaller banks. But I don't know how much of that was pre-committed in the last round and just didn't get paid out. So there's a lot of unknowns in that, and we still don't have the guidance on forgiveness, which is supposed to come out in the next few days. So lots of questions, and a lot of questions from owners as to how is this going to help me make sure I have a hotel in 60 or 90 days when I do reopen, possibly not by June 30th. So I think there's larger questions that are kind of looming. Yeah, and there is a fourth package in the plan. So we'll have to see how that, balances out.
That's true. And to your point, I think AHLA had requested an 8X multiple and a 1231 look back. So we don't know the details yet because we haven't seen the revised PPP.
Right.
But at this point, it doesn't look like that was included, but we'll see. But to your point, they're looking at another round where they look at state and local governments and potentially specific industries such as restaurants and hotels that have it been really the tip of the sword on the impact side.
Yeah, and I think just to add one note to that is, what our concern are the restrictions going forward and how long they're going to last for, right? If they last for months and months and months, can the government continue to keep pumping money in? I don't think so. But this is why I just go back. I think it needs to be left up to the brands and the businesses and not so much, the mayor and the governor, in my opinion, because I don't know how you sustain if I can operate my restaurant at 50% for the next 6 to 8 months, it's not going to work. And the same applies to our hotels. It's not going to work without more support. And I just don't think there's enough money there.
$20 trillion economy. So to your point, there's a point where you cannot, you have to be limited on printing money. People have to get back to work because it's impossible to finance the country without having people that are creating the GDP.
Yeah, and that's the other issue is that, we talk about group business and business travel and leisure, but what we're not talking about is the 26 million people unemployed, which is going to significantly grow every week. And so that alone is folks just not being able to even afford to travel, or, if folks can, they're going from luxury down to, select service or limited service, but as it tends to do during downturns anyway, right? But that's another big concern. How high does that number go? And I think it goes higher and higher and higher with the more restrictions that we put in place, or the government's put in place.
Otherwise, I'd like to turn it over back to Fran, because she's going to review how you can access this material going forward, and then leverage the large BLLA platform.
Well, thank you, Daniel, and thank you, panelists, for your keen insight. We truly appreciate you taking your time, and for everybody being here. Just a couple of reminders. You can email us your questions if you didn't get a chance to put them in the chat to info@blla.org. You can stay up to date on all our digital forums at stay-boutique.com. You can use the hashtags Boutique Strong and Save Boutique Hotels. I want to thank you so much for attending and support our initiative, and ask you to stay home, stay safe, and stay boutique.